You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO. This Week in Futures Options, the program here on the old Options Insider Radio Network, where we break down the week that was from a futures options trading and activity and volatility and open interest and surprise trades and surprise products and all sorts of fun stuff here on the old network. And our man up there at the top, he misspoke a little bit. We're not coming to you live on Friday. Usually we do. But we're coming to you live on Monday today because we had a little bit of a change of pace. We were all out traveling last week, a lot of conferences going on this time of year, and I was off in the hinterlands of San Diego, beautiful Coronado. And by the way, I should introduce myself. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the aforementioned Options Insider Radio Network. And I'm happy to be back in the old Options Insider studio. It's always nice to travel to these beautiful areas of the country. But then again, when we do audio, we're still in the basement of room X or building Y anyway, so we don't really get to record audio on the beach too often. You might imagine how that would sound. But still nice to be back in beautiful and sunny Chicago. And of course, if you're joining us for the first time, first off, welcome to this special, weird, one-off Monday edition of This Week in Futures Options. And then B, if you want to learn more about what we have going on, the rest of the network, the other 14 programs, easiest place to do that, theoptionsinsider.com. While you're there, click around a little bit. Maybe you find some breaking news from the options market, some unusual activity, a lot of that, a lot of breakdowns of different products, a lot of analyses of different trades going up out there. And of course, when you're ready to mainline the audio, It's there for you on the Insider Radio Network tab, top left corner of the page, or, of course, right there on the call-out there on the right side of the homepage. You don't even need to hit the tab. You can hit it right there and select your show and go off to the races. Or if you want to just kind of play the roll the dice version, there's a roll your own. There's a player right there on the homepage, and you can hit play, and whatever the most recent episode on the network is, you'll get that. So you can no shortage of ways for you guys to hit us up and mainline the audio right there at the website. Then, of course, if you're up for it, your true audio adventure can begin via all your favorite platforms, iTunes and the TuneIns and so forth, Google Play, iHeartRadio, etc., including via our mobile app, which is still one of the best ways if you want to really mainline a lot of our back catalog. We have almost 10 years worth of it. The app may be one of the easiest ways to do that. We had so much content coming out of the radio network, it was actually breaking parts of our website. We were working on that last week while I was traveling, which is fun. So yeah, that's the one downside of having such a mountain of content, is that it breaks things. So check it out on the app. It might be one of the easier ways to get everything going back all the way back. And of course, however you listen, website, app, iTunes, etc., make sure you hit us up with your questions, your comments. Also, streaming live. We're not on Friday, but we are streaming live Monday here, October 17th, for all of you playing along after the fact. You can join us via Mixlr, MIXLR. We welcome you folks as well. Speaking of welcoming, let me welcome on my cohort, my partner in crime, my futures options nemesis, Mr. Nick Howard, the founder of Bantix Technologies, creator of a little platform we like to use around here called Quick Strike. Mr. Nick, we missed you in San Diego, but I did get to meet some of the Quick Strike team, so that was fun. So you weren't there, but you were there in spirit, sir.
I was there in spirit. It was probably pretty nice over there in San Diego. I forgot that's where it was. So, boy, oh boy.
Yeah, your team was scamming you for a trip to San Diego on that one. That's not a hard sell, I don't think. I really need to go to San Diego.
Yeah, she's a good team member, so it works out very well. No, it was weird not having to have our talk on Friday, and probably was settled in enough in my remote location for the day to have the conversation. But at the same time, my wife and I were sitting and having a couple beers before our event, and it was a good change of pace. So glad to be here.
So you got it in your blood now. You got the TWIFO in your blood. Your body, you're going into withdrawal when you don't get it. So you're a TWIFO junkie, like many of our listeners, Nick. So let's start feeding that withdrawal. Let's dive right into it. Let's kick things off. Again, we're doing this Monday, so a little bit different. If you go to the TWIO report, cmegroup.com/TWIO, this week in options, don't ask me why they don't use the F. I guess all options are futures options to them, so they don't think that way. So just go to the TWIO instead of TWIFO over there on cmegroup.com/TWIO. You can run the report for yourself. Obviously a little bit different because we're doing it on Monday now rather than Friday. Friday is going to have kind of the rolling report for the whole week. Monday is going to kind of start things off from the beginning of the week. You can go into the data display settings, though, and change that and say, I want to see last week's activity rather than starting from scratch today on Monday. If you are so inclined, and that's exactly what Nick and I are doing, so if you're playing along, you guys can see that as well. Let's kick things off in the area we like to start in a lot these days, Nick, because it's kind of still one of the top-of-mind areas for a lot of our listeners, which is, of course, the crude, the Texas tea, if you will. And, we were joking on the last couple episodes, Nick, that a lot of people were out there waiting for that worm to turn. And Crude, you kind of threw a big wet blanket on him a couple of weeks ago. You were a little less harsh last week, I think, with your poo-pooing of all things Crude bulls. And Crude has been moving to the upside, if not exactly the explosion to the upside that a lot of people wanted. It has been moving upward. We are now in a new strike range as a result. For the longest time on the show, Nick, we were kind of talking about the 45 handle in WTI and that 40 put and 50 call and what would win out. Well, clearly the 50 call won out in the end, at least for the near term, with Crude WTI over that 50 handle, depending on where you're looking on the term structure, about 50 and a half or right around 52, depending how far out you go. But still, it's interesting to look out there and just kind of see, Nick, that these strikes that were the upside bounds not that long ago are now kind of the new downside put strike. Because that's exactly what we saw lighten it up over this past week. It was the Nove 50 puts. Number one with the bullets, sir. 32,000 contracts going up there. And once again, kind of just the way WTI likes to trade, about half of the volume up there in that front month. That LOX6, we'll get to that a little bit with a listener question. We'll just tease that now, get into some of the nuances of futures symbology, all sorts of fun stuff there. But yeah, 32,000 going up there, and about half of the no 50 puts, and about half of the overall volume again which is still kind of mystifying to us. One of our listeners asked us last week, and we've kind of scratched our heads with this for a while, why that doesn't translate into the weeklies. Maybe there's some hidden mystery nuances to that. If you have a thought about why the front month does so well, but the weeklies don't light it up from a volume perspective in WTI, you're an active WTI trader, hit us up. Let us know your thoughts on this issue. Number 2, with less of a bullet, a little bit less, was the D's 45 puts. So puts definitely leading the charge this past week, Nick, with about 24,000 contracts overall. And again, so it is kind of interesting to see these things that were at the money or upside strikes a show or two ago are now the new downside hedging regime. The calls were not forgotten, not by a long shot, but they were also not really in the equation as much either. 55 calls out there in February actually were the number 3 spot with about 15,000 of those bad boys lighting it up overall. And Vol moving a little bit. It kind of depends where you're looking on the term structure. Coming off a bit more in the front portion of the curve, which is, as you know, less vol, more gamma playing over there. And then as you go farther out, vol actually creeping up a little bit. So a little bit of an inflection point there in the middle of the curve. Skew also up a bit slightly last week, but not a ton. People are still waiting for that moment, Nick, where we see this inflection point in crude, and okay, the bulls are back in the driver's seat. Still not seeing that so much. We're getting hints, maybe tastes of that, if you will, but we're not really, certainly not to the level yet that a lot of our crude bulls out there, which I know there are quite a few of you out there in the audience, that our crude bulls may perhaps want to see. And Mr. Nick, a lot of things have been cooking off. I'm looking at the term structure out here as well, the volatility skew over time. And it's the puts still leading the dance, but the calls, as we said before, are starting to become a much more relevant factor, particularly very much in the near term. That said, Mr. Nick, I know you've been looking at a lot of things last week as well as some interesting trades lighting it up today, including a few strangles. So what's been catching your eye out there in WTI land?
Well, it's actually probably pretty good that we are presenting the report in this fashion, because that will allow us to talk about how to use it when it's not sort of the live week, right? So, you've been mentioning what you're seeing in the most active column on the volume side, but what the users can also do is, as part of the data display settings drop down, you can choose what most active you want to see. It'll pick, if the default selection is show me the call or the put, whichever is more, but you can also pick just show me the calls or just show me the puts. So what might not be visible at first blush in here on the most actives in December contract, the second in order of volume activity was actually the 55 call with just under 24,000 contracts that traded last week. So if we kick over to the open interest, you see that the 55 call had the greatest change in open interest, almost a 15.5% gain with over 6,200. So, still there was some push to that expectation on the upside. And like you mentioned, we, still that 45.50 was sort of our buffer before from a price range standpoint for us eclipsing the 50 strike. But, 45 still looks like it's that downside barrier, and the 55 people are, looking to, that's sort of the next push and our upper bound here. So we'll have to keep an eye on those strikes. But, it's probably a good exercise. If you're listening today, or if you're coming in after the fact and listening today, and you go to the report, you can always go to the data display settings, like Mark said, and look at last week or the week prior or whatever. So those are some of the things that we want to try to point out that are available as part of the report. And Mark, maybe one thing that we kind of didn't do it because it's sort of a pain, but maybe we'll have to activate some of these links on the full report. So even on weeks prior, you can go and get some of the details for that week. But, we thought that as an aggregate, just having the information of what happened in prior weeks was sufficient. But in any case, yeah, still sort of rangy. We've been talking about it for a couple of weeks, 2 weeks ago, or not last week, but the week prior, we were up over the 51.25 mark for the front month contract. So we thought maybe there was going to be a little bit upside, but in the market traded that way from a volatility standpoint, but we came off. Vols are off again. Last week they were off. We'll call them flattened and deferred contracts, meaning they were only up like 2/3 to 3/4 of a vol percent, which isn't that much from a price standpoint when you start to get out into the 100 and change mark from days to expiration. But the front month came off quite a bit, as you would expect when there's really nothing more, when we don't push through some of these marks that people are expecting on the high side or are moving through them on the downside. And the December contract came off a little bit too. So we had a little bit of a, kind of a sideways trade in the future with volatility, coming off as you might expect when you don't see any follow through one way or another. Open interest again is up on the week, which is a good thing, just because that there's some activity there. And a lot of the roll 75% of the roll from the November to the December contract has taken place. You're not seeing that necessarily on this report, but if you look at the pace of the roll tool that's available on the CME Group website, you can go and see that as of Friday's open interest final that it's almost 3/4 of the way done on the roll from the November to the December contract. So those are some of the highlights that we've seen there. But as far as another good sort of interesting thing is we could take a look and see what's sort of gone on today in the market. And what I did notice this morning anyway, when I went and was kind of investigating what was happening in crude, you saw a lot of synthetics going on. And when you say synthetics, people were buying a call and a put in the same strike and then also covering them. So people were basically, and Mark, you can talk more to this because I'm sure that you guys have dealt with this in the equity side as well. They were getting out of some pin risk that they might have had. So instead of being stuck at a strike where the future might settle, so for instance, people were doing a lot of these risk reversals and then with covered on the futures. They were making sure that they didn't have any risk of being long and or short that strike. So they just want to make sure that they were neutral there. So they got out of a long synthetic position and got into the underlying position. So it's a little bit easier to handle, or they were just taking off positions that they had. So they got less calls and less puts and less futures altogether. So I saw a lot of that happening as well. And again, we saw some interesting things today. We saw a bunch of series of like these odd lot strangles. So it started tight 49.5, 51, and at 51 traded, and then it moved out progressively, one strike out on each side. So at first I thought it was somebody legging into a condor, but then actually after the third one came in, it just looked like somebody was going out there and it was the same lot size, 247. So it makes me think it's the same person. So they just did a series of strangles, or maybe they did a condor and then they covered themselves outside again on that wider strangle. So if we take a look and see what this week in futures looks like today, even though it's just a day, we're off a bit. So that should not bode so well, or at least instinctively, I would say that would mean that vol would feel like it's going to come off a bit, but it looks like we're up a little bit on the day. So it will be one of those weeks, and I guess we'll talk about it in 4 days too, to see what happens if we continue to get some downside slide. Will we see a bid in the vol? I don't know. I wouldn't have expected as much, but maybe people think, well, we couldn't breach on the high side, so maybe we're going to be looking for the downside to continue. But my guess is that we'll see the vol come off if we stay in this range again for the week. So that's what I'm seeing here so far.
Yeah, right. It's interesting. We don't really talk about, we talk about pin risk and some of the other products out there. We don't talk about pin risk as much on the futures options side of the fence. So is it interesting to see some of the activity that is going up there as a result, and the synthetics, of course, we get into those on a lot of our other programs as well. I don't know if we have time to do a deep dive into all things synthetics. If you are confused about that or interested in that, probably check out our Options Bootcamp program. It's probably the best place for you to go to learn more about that. But we are pressed for time, so we're going to keep on rolling. Moving on, Mr. Nick, into the realm of the shiny stuff. Let's go to gold, and it's been another interesting week out there, another interesting day as well out there in gold. Not a huge move, a mild rally overall in the futures, up looks like about 5 handles or so here across the board, with most of the action again lighting it up out there in December. About 41%, so a little bit different than WTI, which is front month dominated. Gold actually going out about a month or so to Dees to light it up with about 41% and about 35% in the old front month. The rest of the month's lagging behind. Anemic out there. If you're wondering, hey, what's the trade du jour? What's the strike? What's the hot option out there in gold land right now? It is indeed the 13.5 calls in December, which were lighting it up to the tune of almost 7,000 contracts. So again, a little bit different volume levels than we're talking about with WTI or some of the other products, but still lighting it up, and that's good enough for the number one spot with a bullet. Almost 7,000, just a few ticks under 7,000 contracts. Then we drop off to the Nove 12 half puts, which are about 45, nearly 4,600. So we got the far upside, the gold bugs in action out there. Then we got the essentially at the money now. It's funny to see 12 half being the new roughly at the money strike out here in gold land, but it kind of is. So the new at the money puts coming in number 2 out there. Looking at the volatility skew as well, we're seeing our old friend the smile pretty much in a full effect out there. You might see a bit of a modest call bias out there, but it's certainly no Brexit. Certainly it's no all calls all the time like we were seeing before. So mild mild call bias, nothing really reflective of perhaps any pronounced intention or concern in any one direction going forward. It seems like the market is still a little bit up in the air right now, which makes it fun, makes it interesting. We also were talking a lot about vol out here in gold. It was hitting multi-year lows a few weeks ago. It has bounced off those levels, but then coming off again this week as well. So after bouncing a little bit in the last couple of weeks, it's given up a little bit over the past week then. So something to keep an eye on out there if you are indeed looking at becoming a premium buyer to hedge, or you're interested in doing some speculative buying out there in gold. The vol levels perhaps not quite as low as they were a few weeks ago, but still fairly low. You're looking at about a 13 to 14 volatility, depending on how far you're going out in the curve. All the way out, you get to still south of 15. So you're not talking levels like you were seeing in the 20s and higher not that long ago, back last summer of last year or so. So still a lot of room to go on the upside if you are indeed looking at it from a vol perspective. That said, Mr. Nick, what are your thoughts here on all things shiny this past week?
Yeah, I think just reiterate a couple things. Again, for people that are new to the show or just listening or just starting to trade gold, a lot of the change or a lot of activity is going to occur in the first few contracts or the first 6 contracts. So if you look at the report, you see that there's 2 different colored lines. There's a totals and a gold totals line. So the blue totals line is going to total what's on the screen, and the green totals line is going to say this is across all the expirations that Quick Strike's covering. You see that double asterisk, and that's because we only go out a certain amount of time. But you're going to see that most of the OI, most of the activity is really concentrated early on, because that's where a lot of the decision making about the trade and about gold's activity is going to be, on a short term viewpoint. So I think, like Mark has mentioned, vol was off last week. Today it's up a little bit, but everything that you're seeing opinions out there both ways. Some people are saying it's oversold. Other people are saying it's they got more room to go. I think what you're going to find is that people are talking about for sure a rate increase in December. Some are even talking about the potential in November. So if you saw one in November, prior to December, I think you might see gold take a little bit more of a hit, because then that would be an expectation of not just one in December, which would make it 2 total, but 3 total. I think that's correct in terms of increases. So so we could keep an eye out and see where see what the rhetoric out there is sounding like for a potential rate hike earlier than December, and that will determine sort of if we see any downside pressure on the gold. But key things. Vol still low. Futures are low-ish. So again, start to keep an eye and see if you think the worm's going to turn in terms of direction, right? If we think we're going to get a move on the upside again, or if the sentiment changes and there's a chance that there's no December rate increase, then that would tell me that there's an opportunity for gold to rally again, which would be going back to the thing we talked about a while ago when we were on what we at the time was the low end of a range. So you might want to buy puts and buy futures so you can take advantage of the low volatility as well as the opportunity for the upside movement in that. But the key thing for me is just looking at everything is that this. You mentioned it already, Mark. It's sort of that sort of symmetric smile right now that we have in the vol curve, right? And there's a little bit of bias to the call side, but when you look at it from a pure volatility percentage standpoint, it's not that much. So that again tells me that there's not a lot of expectation in one direction or another, or people are waiting for something or an event to occur before we start to see a turn in bias for the calls or the puts. So that's sort of what I'm seeing today, and or from last week. And as far as today goes, the futures are up a little bit, seeing a little bit of a bump in volatility, but not a tremendous amount, and really not great volume out there at all so far. So that's what it looks like in the shiny stuff. And one thing to mention, starting October 24th, so which is I think next Monday, we start to see those new gold contracts we talked about in the long and the short of the futures options podcast a couple of weeks back. So those gold silver ratio and the gold platinum and then the platinum palladium there's the gold silver as a ratio, and the gold platinum and platinum palladium, those are spreads. So those will come online, or at least two of them. The first two I mentioned will come online October 24th. And if you subscribe to CME emails, you should have seen that notice go out already. But there's some more opportunity in the shiny stuff and the not so shiny but expensive stuff that's going to be trading.
Yeah, good point. And listeners, if you're not sure what we're talking about, check out one of the most recent episodes there, second to most recent, I should say, episodes of long and short of futures options. The last episode, of course, we did with Blue and company over there. But before that, it was Nick and myself and Miguel from CME, and actually Eric from the research team, talking about all those crazy new metals products they have, including a lot of interesting ratio products. We touched on the ratios a few times here on the old network, but now they're actually going to have products aimed at that, which should be pretty interesting. So stay tuned for that. I think as Nick alluded to, pending all the regulatory approvals and everything coming into place, it should be going live later this month, which may make it interesting to see how that impacts the products themselves, the current listed metals options, as well as what kind of volume, what kind of use cases these things get up to. So maybe Nick will have to include those in the rotation going forward once they get a little bit of their sea legs under them. And last but not least, before we dive into some of your questions, we like our surprise products of the week. The week is still kind of nascent. Haven't really have a chance to pull up a crazy trade, but we got a surprise product for you. And it's kind of an oldie but a goodie, which is kind of interesting. One we haven't touched on in a while, Nick. We touch on ags every now and then. Typically get into the soybean realm. That's kind of been leading the conversation, dominating the mind share and the market share out there. But there are other ag products out there lighting it up. And last week it was corn's turn to kind of jump into the driver's seat. Corn moving a fair amount. The future's up about 4%, pretty much across the board, a little bit more, a little bit less, depending on where exactly you're looking. So that was good enough to get them at least on our radar. And we started parsing some of the numbers out there, and they were pretty surprising, including about a 4% increase overall in open interest over the past week. Vol also up fairly substantially, particularly, again, let's discount the front month because it's only got about that's effectively a weekly at this point with about less than 7 days to go. So we'll discount the 4.5 point rally because gamma versus vol. But we'll get a little bit farther out. You get about 2.5 points in the actual front month, and then you go beyond that. It's still up about a point. And as you go farther out, vol a little bit falling off. That also reflects where the action is right now, with about 50% coming in the DEES contract, almost exactly 50%. So pretty much half of it right there, and about another third or so coming in that front, effectively weekly contract now. So you're talking about 80% of the volume just in those first two contracts, again showing you why we're seeing so much volatility increase and change in those as well out there, is because that's where all the paper is. And in terms of what's lighting it up If you're wondering, hey, what's going on? By the way, the at-the-money strike around, depending on where you're looking, about in the 355 to sometimes all the way out to 380, depending how far out you go out the term structure in terms of all things at the money in corn. And speaking of which, it was, if you wonder what the number one strike, what the hot option in corn was, number one with the bullet was the Dees 330 puts. So we're seeing perhaps some hedging activity. Maybe some people out here, maybe they're taking off some hedges that are not as necessary given the rally, or perhaps taking the opportunity. They're a little bit nervous as a result of this rally and deciding to come in and say, you know what, let's lock in some of these gains, or at the very least take advantage of this rally to get some cheaper protection. Again, that 330 strike, so that's pretty far away from at the money there, but still enough to maybe get those bumped up to the number one spot with about 32,000. It's a little bit under 32,000 overall. Then you go up to number two. It's again, going back to those front week, effectively, 350 calls in the Nove there, doing about 22, nearly 23,000 contracts there. So a bit of an interesting dichotomy there. Those are actually in the money now, given last week's move. So interesting to see how this is playing out. And then you go farther out the term structure, of course, those volumes drop off precipitously. It's all front week and front month, effectively, out here in all things corn, which again reflects kind of the cycle we're seeing out there. And looking overall at the volatility skew, we're seeing it's kind of a little bit of a tale of two skews, if you will. Near term, we have very much that smile, slight call bias, but still very much in that smile range. Again, kind of reflecting a little bit of ambivalence, perhaps, in the near-term market, a little bit uncertain about where this thing is going. A little bit farther out, you get a little bit longer term on the structure, much more heavy to the call bias. Clearly longer term, the concern, the hedging, the interest is there on the upside. So much stronger call bias as you go farther out. Nearer term, a little bit more of a coin flip as to what exactly corn is going to be up to here. Again, that's kind of reflected in the paper we saw this past week as well. 350 calls and 330 puts, lighten it up. So a lot of interesting back and forth out here. I don't know. It's kind of interesting, Nick. We haven't really talked about corn that much since we started this show. It's kind of been all soybeans all the time. So kind of a nice surprise to have another ag product in our rear view mirror this past week. What caught your eye, if anything, out there in our surprise friend corn this week?
Well, I think in terms of the 330 puts that traded for in the December contract, we're in the middle of the last week. We're around the 337 mark, so those weren't too far off as compared to where they are in terms of the settlement for the future on the week. So in terms of catching my eye, we've seen a lot of back and forth in this underlying in the corn and the wheat and the beans. So I mean, there's stuff going on out there and on Twitter, which try to at least pay attention to what some of the guys and the gals are saying out there about the ags. I mean, I think there's some uncertainty in terms of direction, because they talk about getting whipsawed here and there, and just the overall sort of misdirection of which way each of the products is going to go. So again, catching my eye, just purely looking at the numbers. Vol was up because I think that move up was a little bit surprising. So you saw that vol was up last week, so that's going to make a difference there. And again, surprise moves are much more going to have much more of an impact on volatility than just sort of the stagnant sort of sideways move. And again, looking at, like you mentioned, I think it's always important to keep an eye on what that vol skew looks like, the vol curve looks like, and it's still in the front part of the curve. It looks like pretty much a regular smile. There is more of a bias as you go out in the deferred contract, but again, there's not much going on out there in terms of volume or open interest. So a lot of times when you get to a low open interest expiration, you might see something that indicates that there's a call or a put bias, but you can't always take that as a real good indication, because it could be that there's only a bunch of calls that traded, or there's only a bunch of puts that traded. So you really got to go out there, take a look at the open interest, make sure if it looks pretty balanced and you're seeing that type of thing, then you can consider, oh yeah, there's more of a bias. And it could be, I'm going to go back and look actually after the show, because the December skew sort of was very call biased. Our quick skew number was very call biased, even out 2 or 3 months ago, but it's definitely moved to the point where it's switch spots or generally pretty flat, right? Because we see our risk reversal, our 25 delta risk reversal here, and we see that it's almost zero, but that doesn't tell us whether the call's rich or the put's rich or cheap to the at the money. But here it looks like it's those theoretical 25 delta calls and puts are pretty flat to the at the money. But prior to that, the calls were bid and the puts were offered. So we'll have to follow that up on Friday. I'll do a little bit more research and see if that's sort of a trend where it's flipped one way and then sort of moves towards a little bit more even looking spread as we move toward expiration. Even though it's 42 days to expiration, it's gotten pretty tight here. So I'll be sure to verify that. But again, same thing, keeping an eye on what the skew looks like, keeping an eye on the historical volatility. I'll go back. I think maybe we should cover this no matter what on Friday, so we get a better idea of, we'll get a more seasoned look at what the volatility has done, what it looks like overall, and what the expectation might be based on looking at some of the open interest numbers in terms of the ranges and that type of thing.
Speaking of expectations, it's time to get our listeners' expectations and ideas and cues, because it's time for some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback segment. Of course, a portion of the show where you guys take the reins with your questions and comments and mockery of all things Nick. No, I'm just kidding. Of course. Let's kick things off. Let's see how many we can get to. This comes in. I like this handle. TradeAlytics. I like that. TradeAlytics. He's asking us, will you guys please confirm the last trade time for our old friend LOX6? We were talking about it earlier in the show there. He asked, a quote, couple of hours from 9 a.m. Central. So there's a couple of things in here, Nick, that I think are worthy of addressing. First off, go ahead if you want to answer, obviously, his specific question. He wants to know the last trade time for that symbol, but also it might be worth exploring a little bit, because we haven't really had a chance to do this on this program, some of the symbology around these products. We take this for granted. We kind of throw these numbers and these symbols out there. But we forget, a lot of people, particularly maybe coming to a show like this, who may be familiar primarily with the equity options, and maybe they're mostly Apple and Facebook and SPY options traders. They don't have to deal with a lot of this same symbology that we have on the futures option side of the fence. In fact, the equity and index options, courtesy of our friends at OCC, they just had a big symbology overhaul recently to try to make it even less obtuse for the end user. Still have some ways to go, but they've made it a lot better. That's the one area where the futures options are still flagging a little bit, as in terms of the symbology and all things. And some people, I'm sure, if they go to that page, Nick, at cmegroup.com/tweet, and I start clicking around, they'll see things denoted in symbols like this, LOX6, which is, of course, the front month out there in WTI, and be like, what the heck am I looking at? What is this? So let's start off there, answer his specific question about the last trade time for the front month WTI. Then maybe let's break it down a little bit for some of our listeners, the different components that go into some of the futures options symbology there, so it's not as confusing for them.
Yeah, I'm not 100% sure of the last trade time for LOX6. I mean, I think what might be the question there is, let me go over here and take a look. What do we got? Yeah, so we have about an hour left in the contract. So if that's what, or there's about an hour left in the November contract, the X contract. Okay, so that's the first thing. But then I don't know if he's referring to a tweet that I put out here. When I said a couple of hours left, I put out a trade that happened, and then I said a couple hours left till expiration. So if that was the case, then I probably misspoke, because it was more than a couple hours before there was before that contract expired. So I probably should have said a few hours. So I'm not exactly sure what he or she is thinking of there. So if we want to get some clarity for the next time, I'll give you a better answer from that standpoint. As far as the symbology goes, well, you can look at it two ways. Like I look at it and I don't even think twice about it anymore, right? Because it's I've seen it so many times that it makes sense sort of.
You're like Neo from the Matrix. You don't see the code anymore. You just see the woman in red and everything else.
I see Z and I think December. But the good thing is that if they're in order, right? So FGH, that's Jan, Feb, March. JKM, April, May, June, right? So that works. Like it works well there. Okay. July, August, Sep is NQ and then U, and then October, November, December is VXZ. So they are in order. So once you sort of kind of know what the letters are, then you'll be a little bit more comfortable. And I'm not sure, when we were on the floor, we had different hand symbols for each of the, or we either held our fingers this particular way or we moved our arms a particular way it was usually hand gestures or finger gestures, and you can change whether it was a deferred contract or not based on where you held your hand and that type of thing. But if you're in Quick Strike, okay, and or you're using one of the free tools that are out there on the CME Group website, you won't see it on the TWIO report. But if you go over like to the open interest report and you click on any of the expiration selectors, typically you're going to see a Jan with a year dash through a December with a year. If you click on that, we have the symbols next to everything and then a date associated with it. So if you go look at Crude, for instance, on the open interest profile tool, and you click on one of the expiration drop downs, you'll be able to see right away. And the Crude is one where the contract will say NOV or DECE or whatever next to it. So you'll be able to get the list right there. And what we'll also do after this is I'll go out and I'll tweet what the mapping is, so everybody has that and it's available, and it makes a lot of sense, because once you know it, it's easy. But if you remember, they go in order and they go out in time. So I'll put that out there and make sure I make it clear enough so Mark could retweet it as well to the people that are listening today.
Thank you for that, Nick. Or should I say Neo? Should I start calling you Neo from here?
Call me Neo when it comes to futures options symbology.
Futures options symbology. You are the Neo. So you may not know Kung Fu, but you know your symbology. So all right, let's see. I think we got time for one more here. Let's go. This one. Oh, I like this. This is from someone with the appropriately named Crude. I like that handle, and he's appropriately enough asking about Crude. He wants to know if is the put call ratio useful when trading Crude. This is kind of interesting, Nick. Excuse me. I've kind of espoused on my thoughts on the put call ratio many times here on the network in the past. I'd be curious to get your thoughts in a couple of minutes as well. I pretty much labeled it as one of those options indicators that is bandied about very frequently. It's one of the more cited indicators we see out there in kind of the broad general financial media. Oh, there's put call ratio for this, and it's always given some sort of meaning. This signifies this, or this signifies that. The problem with that is that it's too overused, because the meaning of it is kind of elusive, and you really have to dig into those numbers to really understand what those numbers mean. Because as you know, Nick, when you see open interest, that doesn't tell you anything. It doesn't tell you if those contracts are bought or sold. People just assume that all this call paper is bullish, all this put paper is bearish, when reality could be anything but. So there's a lot of things that go into it, a lot of the nuances that go into put call ratio, which I think don't make it as useful as it really, a lot of people think that it is. But that said, it is a thing you should have in your toolkit. I think of it more as like a starting point than anything else. You're looking at these, you're doing a lot of your cursory top level analysis, maybe to try to find a new product to trade, or you want to analyze a product you already trade. This is one of those things you should have in your toolbox. So maybe you're starting to scan for unusual activity. You're going to look for spikes in volume there. You're going to look for spikes maybe in open interest and say, oh, maybe something happened that day. Maybe also you're going to scan for the put call ratio. Now that, of course, also requires you to have some knowledge of that product's history in terms of put-call ratio to know if something is even out of the norm. You have to have a baseline to compare it to. If a product always trades around, 0.5, then and all of a sudden is trading at a 2, that's a little bit different. Maybe that's worthy of note in and of itself. Similar to the unusual activity spike, you want to look and see, hey, what's up there? What trade went up there to really cause that to change? But all of that is just, again, that's just a flag. That's like a top-level analysis you have to do. Then you have to start digging. And that's where the real homework comes in terms of, okay, here's what this number is now. What caused that? Let's go dig into the volume. Hopefully you have a decent broker, or you have an analytics platform like QuickStrike where you can kind of do a little bit of a digging into exactly when that paper went up. And that's your second tool out there to say, okay, this is what actually went up. Now, what does this actually mean? Where did it go up? It's a little bit harder on the futures option side of the fence because things, still don't have that full level of transparency. Like, if you go digging in on, let's say, Apple options volume on the equity option side, you can kind of see a lot more in terms of where it went up on the bid-offer spread and those types of things. It can help you get a little bit more insight into exactly what perhaps the intent of that trade was. Futures options still a little bit more opaque there. Guys like Nick and his team at QuickStrike are working through platforms like this to try to reduce that opacity and really make things a lot more transparent for you guys out there. But it still is a little bit more difficult on the futures options side. All of that a long way around to saying, is it useful? Yeah, it's something you should have in your toolbox, but this is not the first thing you should be going to. Like, okay, bam, the put-call ratio, this translates into this, therefore I should do that. That's not how the analysis works. It's one of your top-level flags along with other things, and then take that in conjunction with your second levels of due diligence and homework to say, okay, this is what that actually means. If you just say, hey, put-call ratio is 3, I need to buy calls in WTI, that's not really how it works. That said, Mr. Nick, I'd be curious, we haven't really talked about this before. What are your thoughts, A, on put-call in general? Are you with me in kind of the over-circulated camp, or do you find it maybe more useful? And then B, what are your thoughts in particular when it comes to crude?
Well, I think it's on. You can answer it both ways, right? So we're talking about crude here, but it definitely is a function of the product, right? So if you go look at the S&Ps, you're going to see it tilted one way. If you look at crude, you're going to see it the other way. I think, like Mark said, I think it's something that's important to use in combination with the other stuff, right? So you go out there and you see the trade. For instance, there's a put call ratio from a volume standpoint, right? So that gives you an idea of, hey, what kind of activity are we having today, the last few days, this week, like we have in the report. So you get an idea of where some of the trade's occurring, right? So that's the first thing. So it becomes important from that standpoint. Then you look at it from an open interest standpoint. He's saying, well, which way is the market generally biased on a given contract, a group of contracts, or for the product itself? Now, again, this is another thing. Depending on what the product is and depending on what the ranges have been in that product's underlying, you're going to see different things. So you may have to consider the put-call ratio over a period of time versus what it is in its entirety. Then you also look at it in conjunction with, as Marcus said, you look at it in terms of what does the skew look like? So do we have a real heavy trade one way or another from a skew standpoint, meaning are the puts really bid or are the calls really bid or vice versa? Are the offer, are they one bid, one offer, that type of thing? So I think you got to work I like to think of it as working your way from the bottom up. You look at it from a volume standpoint to sort of see how you can use it from an intra-day standpoint. You look at it from an open interest end as an intraday or multi-day standpoint, like what's the sentiment of the market, and then you look at it in the conjunction of does the volume maybe support which way the skew is going, or does the open interest maybe support what the skew looks like or what it looks like over time. So I think it's useful. I think again, you don't want to, as Mark said, you don't want to go. You don't want to be on the wrong side in terms of the overuse, right? You want to use it as just another piece of information to help you make a particular decision or to help you reinforce a decision or to help you sort of have questions about something. So you could say, well, what does this mean in comparison to this other factor? Like what does volume mean in comparison to the change in the volatility? So I like it. I like it more the more I start looking at stuff in general, because for me, it's important just because it gives you an idea. It gives you a quick look at what that particular product is doing. So I like to use it sort of as an overview as to what's happening somewhere. And then you can look at it from a historical standpoint, so you can see how the worm has sort of turned over a period of time, and over that period of time, how the underlying has moved and how volatility has changed. So I just like it as sort of one of the brush types in my overall side pack of brushes when I'm painting the product picture. So
Your side pack of brushes. I would have gone with tool.
How about that? How about that for an artist term?
Yes.
My old side pack.
There you go. I go more with tool in the toolkit, but whatever floats your boat, sir. It's kind of like all options indicators, these ones that are bandied about all the time. Hey, VIX is X, put call is Y. All these things are thrown out there, but they really require a lot of context to understand exactly what that number means. A put call of whatever or a VIX of whatever by themselves don't really mean a heck of a lot. It's all about the context, and hopefully that's what you guys are looking for when you're looking for this. Unfortunately, we're looking for pretty much the end of the show, because that's all the time we got here on this extra fun edition of This Week in Futures Options. There we go. Just waiting for that hook to come in. There we go. All right, but before we go, one last time, Mr. Nick, you're talking about all crazy journey today on the show. Not just from a product perspective, we got into, of course, oil and then gold and, of course, corn, but also some interesting questions talking about symbology, how these things actually work, these crazy things we call futures options here, as well as, of course, some interesting indicators and how they are applied or perhaps should be applied or perhaps not in the world of futures options. But you guys are always cranking away. I see the heat maps are getting a lot of love out there, Nick, so congrats on that. And what else are you guys working on over there in the land of Quick Strike?
Let's see. So again, nothing big to report in terms of anything in terms of imminent release. We should start seeing some more advanced versions of the cross correlation matrix coming out there and available for free on the CME Group website. I think people are going to like that because it's going to let you do a lot of analysis just from a inter-product speculation and how they relate to each other over periods of time from both volatility, underlying, that type of thing. And then if you are a CME Direct user and you're out there, we're going to be doing some good block trade stuff that's going to be available out there. I tweeted some block trade information today. I don't know how widespread that's going to be in terms of its availability, whether it'll be in the regular Quick Strike, but for CME Direct users for sure, and then maybe even for public CME Group website users as well. We're going to try to put a sort of an easier and more readable face on the block trade feed, because that was a lot of the stuff that I talked about today happening. Those strangles were in the block trade as well as those synthetics in order to mitigate some pin risk. So those are the things to keep an eye out for with the product itself. And again, I encourage you to go out to the CME Group to take a look at the free stuff. And if you want some more advanced stuff and you really want to dive into the This Week in Options, register yourself for the more complete professional version of Quick Strike, and you can see if there's something out there that catches your eye and you find the tool useful, because we do try to give different levels available for people out there as well. So if you have any questions, go to the site, ship an email over to support, or shoot us an email at support@quickstrike, QUIKSTRIKE.net. Or go register for either the free version on CME, or come take a look at the more advanced one on our site.
That's pretty cool. Block trades. We don't really see a lot of that data disseminated out there for futures options. Yet another area where I was referring to earlier about the somewhat opaque nature of futures options still. You guys doing yeoman's work, sir, Nick, you and the team at Quick Strike, to try to improve the transparency out there, sir. So ballyhoo to you. And also for you guys out there who want to take advantage with all this transparency they're bringing. Again, try out the free version, cmegroup.com/Twio, or if you want to graduate to some of the big boy stuff, like the block stuff, that's pretty cool stuff. I haven't had a chance to play around with that, but that is indeed coming out. I do want to check that out. Check that out over there at the Quick Strike professional version. Nick told you how to hit them up, and on behalf of Nick and myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this special one-off Monday edition. Don't worry, we'll still be back on Friday at our usual time, 3 p.m. Central, 4 p.m. Eastern. So you'll get a double dose of Nick and I this week. So hope you're ready for that. And we'll see you next Friday, actually, for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.